Hey Cheryl, welcome to the Buy, Grow, Sell podcast.
Hi, Simon. Thanks for having me.
My absolute pleasure. I'm really looking forward to talking to you and sharing a little of your story. I know there'll be lots of people listening who will just get so much out of it.
I hope I can be helpful to someone.
I'm sure you will. And you know what? If nothing else, we'll have a laugh and have a good time, and that'll be worthwhile.
Sounds good to me.
Now, I know we're going to eventually talk about what you're doing today, but I think we'll spend a little bit of time maybe talking about your business attentively. Maybe you could give us a little bit of background on the business to kick us off.
Sure, absolutely. So, Attentively was a tech startup that focused on marketing automation, social listening, and influencer engagement for causes and campaigns. And you might say, oh, well, that sounds great, a SaaS, but how much do nonprofits really, consume? Well, here, at least in the United States, it's an $800 billion a year consumer of products and services. So the nonprofit sector that we were targeting, is actually a significant a financial resource.
Wow, that's a massive market. And look, and I couldn't tell you off the bat what the size of that market is in Australia, but I do know it's very, very large as well. So what does that mean? Talk us a little bit through how, social influencing and the marketing, and how does that sort of generally work? It's, I know enough about SaaS to be dangerous. Yeah, can you help us understand that a bit more?
Sure. Well, I mostly got my mom to understand it, so I'll try. But, but basically, we built a dashboard, and people could import, our customers could import lists, their email lists of supporters or donors, and then match to publicly available social media data, understand, wow, here are the top 10% of our influencers that were just lurking in our list. And I'll tell you, for especially the major nonprofits that we work with or larger candidates, we almost always found famous people. Almost always found famous people who'd given $100 or $25 or responded to our petition. And of course, this is someone who can potentially have a whole other impact and be an ally in a completely different way. And this is de rigueur in the corporate marketing space. As you know, influencer engagement is, a billion-dollar industry around the world. And yet, at least here in the United States, the nonprofit sector very much behind in terms of understanding, the new power of individuals online.
Wow. Okay. So if I understand this correctly, so you've got all these not-for-profits, they've got big email lists, they've been good at building that over the years. And I guess you're the kind of bridge and you're filling the gap between, well, yeah, all you've got is an email and maybe a name and a phone number over here, but actually this is their world socially on platforms and what they're doing out there. This is their sphere of influence.
Exactly.
And
This
bringing
is their
those
sphere
together.
of influence, on which platform, how many people do they reach? You want to talk, for example, about climate change. That's great, but here's the language that they're using to talk about these issues. Don't you want to use those same hashtags to talk to your audience, and get your message a little further faster?
Wow, that's huge. Because I know even in our business, trying to connect the dots with all these different platforms and pieces of information out there, and that's extraordinarily difficult. So that's we found it extraordinarily difficult. So that's amazing. Congratulations on a brilliant idea, but clearly a successful one as well.
Well, thank you. Well, I wish I could say I came up with it all by myself. I had a business partner, but at the same time, it was really applying technology that we could see was happening in the corporate sphere, to a sector, that had somehow overlooked it, which is often, as you know, Simon, where the best ideas come. They come when you see, a problem and you notice there might be a solution.
Yeah, cool. And so you've built this platform, and just to sort of understand or round out my understanding of the product here, so are you integrating with the customers' CRMs and stuff like that to be able to access their data? And then is that how it kind of works?
Simon, did you actually work at Attentively?
I'm looking for a job, actually. I'm going to be honest.
No, that's exactly, you described it exactly how it worked. And this was really important in terms of providing tools that our customers could use themselves. However, about 25% of our clients were agencies themselves. So this came out, the idea for Attentively actually came out of our agency at the time. It was a digital agency, again, serving causes, campaigns, candidates, etc. And, we could see, having our foot in the world of both technology and marketing, but also nonprofits and causes, that, there were different tools being used in different spaces. And so we wanted to bring the tools that corporate marketers were using, to the causes sector, tailored in a way that made sense to them, and at a price point they could afford, and integrated into the tools that they use. And look, trying to be smart about it, we actually had our exit strategy as we were starting the business. We knew,
Yep.
yeah, which is like, really, are you really playing this game, right? I think a lot of people go into business and think, especially with a tech startup, they may not have an exit plan. They're just thinking like, I just want to get this up and running, and maybe we'll IPO. Maybe, okay, but that's actually pretty rare. Most, if you're successful with a startup, as Simon, with a tech startup at least, most likely you're going to get acquired. And so we knew that by seeking out strategic partnerships with the major CRMs in our space, by making sure it was really easy to plug and play their software with ours, that we would get on their radar. Most acquirers really want to get to know the company. It's not just the bits and bytes, it's also the relationship. And so that's how we were acquired. We were acquired ultimately by one of our strategic partners. And what they noticed was that a third of our customers were also their customers. And that was a sign that, there was a market there, that we were providing a solution that their clients really wanted.
Yeah, fabulous. Man, there is so much to unpack here. This is cool. I want to come back to the buyer and how you worked with the NFPs, and for what it's worth, I sat on the board of a not-for-profit here for about 5 years, and I found traditionally they are quite, I won't say resistant to change. It's more that they're always struggling for capital, and so investing in new things was always a challenge. But before I get into that, I've got to take it almost back a step here, because you've touched on something that's dear to my heart around having an exit plan and starting with the end in mind. So you mentioned you had a business partner, a co-founder at the time?
Yes, I had a co-founder. Her name was Roz Lemieux. And she had been my co-founder with the then digital agency, and then, of course, the tech startup as well.
Yeah, cool. Okay, so you had a little bit of history. You're obviously friends. You get along. Did you, when you started this, the first time you guys went into business together, was it? I'm just curious about how these things evolve. I've seen everything on the spectrum, right? The good, the bad, the ugly. Friends going to business, it's just amazing. We always knew we'd work well together because we just get along so well. To the, hey, we were really good friends and really we shouldn't have done business together because, it went the other way. And did you guys have discussions or talk about, what was that like at the beginning?
Yeah, absolutely. Well, I did know Roz before. I knew of her, though, really. We weren't necessarily friends. And I do think that it's difficult to go into business with a really, really good friend unless you are both very emotionally centered and, are doing the work, okay, on the relationship. It's really challenging. I think it does help if there's at least starting off a little difference. What happened was, Simon, in American, I had been recruited here to the San Francisco Bay Area from Washington, D.C. by a major PR company. They have branches in 80 different countries. And they wanted me to reignite the West Coast practice, digital practice. Happy to do it. Sounded interesting and cool. I'd always wondered about the West Coast. When I got out here, I could see why they took all the trouble of importing me from one end of the country to the other. It was the kind of gig that in the San Francisco Bay Area, like, there's so many other amazing, exciting things you could do. Like doing that, was not the most exciting, but, I busted my ass. I worked really hard. I had a promotion built into my offer letter that when it was time did not come. And I actually,
ouch.
and I actually gave them, a beautiful list. Look, if we hire the following people, if we do the following things, I can bring in $1 million in revenue next year. They thought that was crazy. So I quit. I was like, if you're not gonna honor your promises, if you're not, if you don't believe in the, amazing work that I've been doing, like I just did the math in my head. I'm pretty sure I can scratch up enough work on my own to do just fine. So the power of a network, I actually sent out a tweet. And at that point, I had also some micro celebrity, from my thought leadership, writing, blogging. I sent out a tweet the next day that said, "Who wants to work with me? I find myself suddenly available." And from that, I actually got a lot of incoming, Simon. And one of them was the boyfriend, now husband of my business partner, who said, "Hey, my girlfriend," he was actually a very close friend. He was like, "Hey, my girlfriend is doing this thing. I think that you guys, would work well together." And so we said, well, let's date before we business marry. We did a project together, and it was like she completed me. Like we were yin and yang. Like all of the things I
Nice.
hate doing, she loved doing, vice versa. Here's how I knew it was magic. I knew it was magic when we were on the phone and I was describing a thing, and by the time I finished describing it, she had built it in a spreadsheet.
She
So,
sounds like a whiz.
so magical. Yes, so magical. So
That's
yeah, I
cool.
would definitely, caution you, like, make have your cousin not be your first choice of a business
Yeah.
partner. Like,
Yeah. No, well, that sounds like you've come together, and there's nothing like, I think, a third person who knows you both to go, yeah, I see something here, it's, yeah, and I guess you come into it with your eyes open, right, rather than the kind of rose-colored glasses of a friendship or something like that. So, no,
or
that's
even just
cool.
the higher expectations. I think we actually have higher expectations of those who are close to us, and just get, jump to like, you're doing it because you're always lazy like this, as opposed to like, hey, more objective, like, is something, what's preventing you from being successful?
Yeah, it's the work hat versus the friends hat, right? It's yeah, that's interesting. And so from that conversation, how long did it sort of take you guys to kind of get up and running and get things moving, get your first customer, all that sort of stuff?
Well, we weren't starting with a huge bank account. I think we both had $10,000 in the bank, American dollars. And I said, look, if we don't have clients by the end of this month, I have to go out and get a jobbity job, because this is like all of the money at that time. It was some years ago. Yeah, we hustled hard, and we had, 3 or 4 clients by the end of that month. And within a
Wow.
year, not only, had we quintupled in size. We started with 2 people. We had 10 people on staff at the end of the year, but we had booked that $1 million in revenue
Oh,
on
wow.
projects that were near and dear to my heart.
How important is it to you? I mean, in terms of your energy levels, in terms of how, I guess, influential, you are in your own role to be doing the work you love.
To me, it's really important. I mean, it's our waking hours,
Yeah.
and it doesn't feel as much like work if it's something you love doing. And so I think no matter what you do, some of the happiest people I've known have been tax attorneys, like for whatever reason. And I remember, it was actually my, one of my best friend's dads growing up was a tax attorney, and he loved his job. And he was like, Cheryl,
Yeah.
it always changes. And there's a lot of history in taxes. There's a lot of social engineering that's happening. There's, all this, math, and, well, at least American taxes are pretty complicated. Like, he loved his job. Like,
Yeah.
and that was really inspiring to me, that, I wanted to love my job, whatever it was, as much as he did. And what I tell young people now, and y'all listening, some of you might be young or starting over in the pandemic, maybe you're young at heart, the job that I have, the roles that I play, there was no major for it in university. It didn't exist. My job did not exist. Like technical services, using the internet for nonprofit, it wasn't a thing. Like no one was doing that. The World Wide Web even wasn't really online. So, what I tell people is, look, the thing that you are destined to do might not exist now, and that's okay. Follow your passions, the things that you love, put on a layer of technology, because that's going to be important no matter what you do. And you might find that you end up with a cohort of other people like I did, creating our jobs and then creating jobs for a whole bunch of other people.
Yeah, that's really cool. Thank you for sharing that. It's, I remember a family mentor of mine, somebody who's like a father to me as well. I love him dearly. But I always remember him saying to me when I was in high school, do the work you love and you'll never work in a day in your life. And I remember trying to get my head around that at the time. I was like, yeah, I mean, you kind of understand it from a basic level, but I think you got to kind of work a few crappy jobs before you really feel that.
Oh, absolutely. And have some terrible managers and be like, oh, I want to be the opposite of this.
Yeah.
I've learned from this. I want to be not you.
Yeah, absolutely. Yeah, it's funny because everybody at our team's about 10 people as well, but pretty much everyone at our team's what we call a corporate SKP. And the little joke is sometimes you've got to kind of work in a place to work out what you don't want for the rest of your life. And so, and that's not to say all corporates are bad. They're not. They just, they're big and they've got to manage lots of stuff. But it just, obviously it works for some and not for others.
Indeed. And look, there, if you're inside a corporation now or a decent sized business, you can still be, what we call an intrapreneur. You can start your side hustle, as we call it, here, where, you're starting your next thing, you're starting your transition, you're getting your business plan together, your pitch deck, you're looking at funding and financing and team composition, even while you're working your job. Or if you love your corporation, like IBM, I've had a lot of friends and family work at IBM, and IBM, to their credit, there's a reason it's over 100 years old. They're constantly reinventing, and they're very good at taking someone and having them have a very, a varied career, even within the same large company. So, they really reward entrepreneurship and encouraging people, to see themselves as entrepreneurs within a larger context. So I think especially now, when a lot of people are dragging themselves to work and, from their bedroom to the other room, this is a time when, if you are bringing to the table fresh ideas and energy, excitement, vision, people are ready for leadership.
Yeah, that's some great advice, Cheryl. I think there'll be a lot of people nodding their heads right now. So take me forward a little bit more. So I'm going from my own little experience here. So I've 5 years on the board of an NFP and understand the struggles of trying to raise money and you want to do amazing things and change the world, but man, it is hard. And we even had some big partnerships, which I won't go into a name all here, but it just, even with some of those big names, we found it really hard. So I'm curious, did you find when you were talking to NFPs, was there generally was it hard to get your solution embedded into their businesses, or are they a little bit more advanced over in the US?
Well, in terms of your NFP, you're talking about wheelchair rugby?
Yeah, that's right. Wow, you've really done your homework here.
What an amazing cause. I can only imagine those games sound amazing. So I'm kind of jealous, and thank you for, giving yourself to such an amazing cause. Yes, it was very much an educational sale, to answer your actual question. We found that, again, because influencer engagement and marketing was relatively new to the causes sector and still is 10 years later, believe it or not. It's still a concept people are embracing, yeah, we definitely had to coach people, explain it to them. We did a lot of demos. I already had a thought leadership platform. I did a lot of talking and still do, about, how influencer engagement, can be transformative. As you saw, it's a partnership like many others. It's just a different kind. So, yes, so that then, when you have a longer sales cycle, that certainly has an impact on your runway, for sure. And we had to program that in. But over time, our reputation is so important. What I tell people is I, would not have been able to start my businesses without my relationships. Damn sure couldn't have kept them without those relationships. Okay. And so, as the reputation of the company spread, in a relatively, we were, even though we were small, we were highly visible, in part because we were female technologists, in part because it was a very new technology for the sector, in part just of who we were, as leaders within that sector. That really helped, being able to deliver a great product that we'd spent a lot of time talking about made a big difference.
Yeah. No, that's really cool. It's so it's such a fascinating area, and understanding how this is evolving. I know we tried very hard to kind of get certain ex-rugby league players and stuff like that to be a part of it, but there was always this missing bridge, which it sounds like that's what Attentively was. What did the model look like? I mean, I think most people, when they hear SaaS, they think monthly subscriptions or annual subscriptions and stuff like that. Is that have I got that right?
Absolutely. Pricing is always tough, as for especially when you're in that very, alpha beta mode, how do we price this? And we definitely had multiple schemes. I would say we first did monthly, and then we found economically, because of the educational nature of the sale, and because it takes time. It really takes 3 months, as for any kind of digital campaign to, it's a cumulative effect. So we just found that annual subscriptions, just locking them in, giving us plenty of time to show how dope the product was, that helped our bottom line, but it also helped with retention and support of the customers.
Yeah, that makes sense. So there's a period here where people go through the whole buyer's remorse and they're not sure and they're kind of working out the new language. So you've bought yourself some time to demonstrate and prove the product.
Exactly. And whenever people used it, they saw amazing results, of course. If you reach out to the people who are most passionate about your work and who can reach hundreds of thousands to millions more people than you, yeah, you're probably going to be able to make something happen. So, it was a really exciting and tumultuous adventure to be on. I actually wrote a book about it called Mechanical Bull: How You Can Achieve Startup Success. It has been an Amazon bestseller. We're coming out with a second edition with a little more pandemic-related content, and we're going to do the audiobook for those of you who like to listen out
Cool.
there. You're listening right now. And I wrote the book that I wish that I had starting out, and it really goes through the life cycle of a startup, which is usually about 5 to 10 years for a tech startup at least, and including exits. There's a whole chapter that's just on investor relations and exiting and the whole M&A process. And the reason I wrote it, the other reason was that, after we sold the business in July 2016, a friend sat me down and said, Cheryl, more people have been to the moon from America than have done what you have done. 17 people, apparently, have been to the moon. Just one woman who has done what you have done. Attentively, as a tech startup, is the first tech startup with a Black female founder on board to have been acquired by a NASDAQ company, a NASDAQ-traded company, Blackbaud. So yeah, a pretty big deal. So, I hope that people, if you're about to launch a business or you're, knee deep in it right now, my book is hopefully a fun, but also rich resource for you.
That's fabulous, Cheryl. I mean, clearly you're a bit of a trailblazer here. So, and we'll put some links in the show notes to the book Mechanical Bull. So suggest everybody go out there and grab a copy of that, because I'm sure it'll be a fantastic read, and I'll be doing the same. So, speaking to those people doing those tech startups, I'd like to come back to the point of your model for a second, because. Mm-hmm. You made an interesting point about switching to annual and how that helps cash flow, because I just imagine, and certainly people I've spoken to say when they're starting a SaaS business, they're generally burning a lot of cash at first before those monthly subscriptions get to a point where they're breaking even, and then of course making profit. So was that part of the decision that you made as well?
That was definitely part of it. I mean, certainly, getting more cash in early, the better, so that we could continue to make payroll. What I have found is, under 10 people, payroll is a thing, right? Like just making sure, do we have enough? Over 10 or 12 people, payroll is not like the main issue. Like you're going to make payroll. There's other problems. New problems to face. So, we wanted to make sure, and there were times when people got paid, before we did. We made sure we took care of our people for sure. But yeah, absolutely. That was a big part of it.
Yeah. It's interesting. It's, making sure people have got enough runway to kind of get to that point is interesting. And that's why people raise funds and do all these sort of fabulous things. But that's cool. And so from startup to selling in 2016, how long was that?
We really got started around 2010, 2011. We bootstrapped the product internally at Fission with just excess developer hours. But then it just became clear, we had some of our clients as customers of Attentively, for the agency. But it was clear that to really take off, it needed its own team, it needed its own structure, needed its own leadership. So that's when I started the process of fundraising for the business. And at the time, we existed in a milieu of people doing the same work, and many of them launched their own startups. But what I didn't realize, at least myself at the time, was that most of those were white guys. And their experience fundraising was very different from mine. So, and I didn't really know how different until many, many years later. So, even though I have this micro celebrity, I'm on TV, my business partner and I have already created a multi-million-dollar revenue company. Okay. Like I've already done that. We're about to do it again. Yeah. It was very difficult. I was used to people taking my calls or, having meetings with me, and, I got a lot of pushback, and I'm now an advisor on a number of funds that invest in women-led tech startups. And, one of them told me, look, Cheryl, we worked really hard to weed out as much of the bias in our system as possible, because we want more Black and brown female funders to get funded, by our angels. And they said, we got there, except when it came to writing checks. It's really hard to get people to write checks. And they said, it takes us 7 introductions to funders, to investors, to get a white female founder funded. It takes us 50, almost 10x on average, to get a Black female entrepreneur funded. And when she said that, I was like, yeah, that sounds about right. I probably, like, in my head, Simon, I'm just that kind of entrepreneur. Like in my head, at some point, I just was like, this is a numbers game, and I'm just going to have to talk to a lot of people to get. But yeah, I mean, so that's really inefficient and stupid, right? Like, you're already talking about a group of people who, have worked really hard to get where they are against a lot of odds and a lot of prejudices. And then it's like, literally 10 times the effort to get less money, to get less money. So, it's a problem when you talk about women. I don't know the statistics for Australia. I imagine they're not that different, but here in the States, something like only 2 to 4% of venture capital of any kind, pre-seed all the way through Series D, 2 to 4% goes to female founders of businesses, even though Again, I don't know about Australia, but in America, women buy literally 75 to 85% of everything.
Yeah, yeah,
That just doesn't make any sense, Simon. That's some 19th century bull hockey, okay?
yeah, yeah. I hear
So,
you.
yeah, so look, here's what, what I hope if you're, planning to buy, grow, and sell. I think the dynamics are probably similar around the world, which is that, you want diversity on your team, diversity of skill sets, diversity of backgrounds, diversity of worldviews. It just makes you richer. All of the studies show that diverse-led firms are more innovative, they are more productive, and they are more profitable, which is the NASDAQ. We mentioned that. I don't know if your listeners are aware, but the NASDAQ recently now requires all NASDAQ listed companies to have diverse boards. If they
Yeah.
don't get a diverse board, they're going to get kicked off the NASDAQ. And that's not nice. You might think, oh, virtue signaling, culture war, isn't that sweet? No, it's because they actually have also seen the data that says the diverse led firms actually perform better.
Yeah, yeah. It's funny, isn't it? It's this question out there, and we've had a very similar thing in Australia around women on boards. It's been quite a big initiative, and of course the big debate has been to have quotas or not have quotas, and I think certainly people, have share my opinion on this sort of stuff. I'd like to think that quotas aren't necessary. You want to be able to say, hey, male, female, race, whatever, let's make sure that the best candidate has the job. And as I've had a few people say to me, Simon, mate, that's lovely, and I'm sure you probably be like that, but that's not how it works. People just, they have biases, and sometimes they don't even realize they've got them. And we keep pushing the message for women on boards, and we've made incremental little steps as opposed to the kind of larger steps that everybody kind of thought we'd be at by now anyway. And so I think to add additional layers around whether it's race and whatever else, these things makes what is already a complex issue even more complex. So I think I've probably come around somewhat to the point of, some people will just never get it unless you force them to. So now you've got a quota.
Well, right, and I think from the Nasdaq standpoint, it's I would say it's a soft quota. They're not telling you exactly how to diversify your board, but they're like, look, this is what a diverse board is going to look like. It's going to have people of different sexual orientations and different ethnicities and probably different genders, because there's more than one gender in the world, and one of those gender buys all of the things. So, you might want to get their input.
Yeah.
Oh my God.
Here's a crazy thought. Maybe your board should reflect your society. Oh,
Or
hang
your
on.
customer base. What a crazy idea. Yeah. So, I think, it's a soft quota, but, it is a quota just because I think, Simon, some people, they need the push, and they also need guidance. Some people just are, they're linear thinkers. You and I are relationship people. We're probably both network thinkers. Not everyone is like that. And, again, I can really only speak to the United States, but the other challenge is that people don't always have diverse networks. And so they're not really sure. They have to put in extra effort. And in order to put in that extra effort, you have to push them. Something like 75% of American white people don't actually know a person of color personally as a friend.
Wow.
I know. That's pretty crazy, right? That's insane. Yeah, that's pretty crazy. So then you can see why then it makes it challenging, where they're like, oh, well, I guess these were the best candidates because those were the ones I could find. It's like, yeah, but there's other people out there that you haven't talked to. These aren't actually the best people. These are the best people that or that people know. These aren't the best people at all.
It's the best person you can see once you've applied your various filters.
Yeah, once you have done the minimum. Once you have done the minimum that you normally do, and yet actually what I would challenge folks to say is that to get to excellence, you've got to blow those barn doors open.
Absolutely. Yeah. Well, look, and don't be afraid of change, right? That's a really almost dumb thing to say because people are inherently afraid of change. You and I were talking about lizard brains before. I mean, that, and that's the part of the brain that makes people, fight or flight, right? So I think being willing to, take on people who have a different perspective and seeing it for the strength rather than it being a weakness. And, as you've said, I mean, there's so much statistics about this stuff now that it's proven to deliver better results. So yeah, look, hey, we're in an amazing time of history, right? It's we're going to continue seeing change, and one day we'll look back and go, wow, yeah, people really did stuff like that. That's really crazy.
Well, exactly. Well, and just, here are the two things that I say. When logic leaves the room, that some nonsense like racism, misogyny, like some weird gay stuff that you have hangups about, like some nonsense has entered the room. Okay, so that's if you're in a room and you're like, this doesn't make any sense. So know that that's happening. People don't come out as much. Well, nowadays some people feel more free, but generally speaking, people, especially if it's a bias that they don't realize they have, right? But all of a sudden, like, the conversation gets weird, but the other thing, the flip side of that is return on investment, ROI. ROI, if you want ROI, you need DEI, diversity, equity, and inclusion, period. Especially in this time, because yes, things are changing. You need people in your leadership, for example, who aren't the same generation as you. Right?
Yeah,
you need, right? I mean, you need to be able to, look both ahead and behind in order to respond to a very volatile, and fluid situation that we're living in, no matter what your sector. So, I think that it's really important to, not imagine you yourself as the customer, you yourself is not your employees, right? You are not the ultimate decider. You need to be able to hear from other perspectives in order to, synthesize enough data to make the best decisions that are going to make you the money and success you want.
Well said. Well said. I could keep talking to you all day. So I'm going to have to fast forward a little bit to your exit because people will hang me out to dry if I don't. You said something which I do love, that you set out to build the company to exit one day. It's funny because I've had lots of coffees with people in startup mode, and I think nobody truly understands the need to start with the end in mind and work towards an exit more than a tech entrepreneur. There's just something about tech. They go, I have to sell one day. So you obviously had that in your mind. That was the framework that you and Rosalind had put together. How did you know, like when you're on that journey, I think you said it was about six odd years or so, how did you know that it was time to start having those conversations?
Oh, that's a great question. Well, for every, at least tech entrepreneur faces but often non-tech, faces a decision at some point where you say, okay, we could either raise another round of funding, we can do a Series A or Series B, wherever we are, or bridge, depending on how bad things are, or we can sell. It takes about the same amount of time. It's conventional wisdom is 6 to 12 months to raise a round, 6 to 12 months to sell. So, we were at that crossroads, right? Where we had, we had strong revenue, but as you mentioned, for startups, there's always burn. With a tech startup, it takes a while for you to really get to break even. Although we did get to break even a couple of times. So yeah, we're looking at our runway and saying, well, we could raise another round, but here are the other factors surrounding us. Things were changing, like GDPR was going to impact, the types of data, that we would really even have access to, and how all the APIs were working. There were, all kinds of, other, competition that was rising around us. We had squashed our initial competition, but some bigger players, again, had noticed what we were doing and were trying to, get those. So we said, is this a time? Like, we always knew that this was the type of software that would really need to get plugged into something else, to have its full fruition. Let's run a process, let's see. So we interviewed M&A bankers. That was really weird. I was super pregnant at the time, so that,
Wow.
added a whole other frisson to the process, which was a really a good test. I mean, we were different than, a lot of the startups that they were used to working with, and how they treated us, in that difference, like this is coming in a different package, because that person, your M&A person, is going to have conversations that you're not in. They have to represent you. They have to be you in those conversations. And if they're not, really tuned into you, your value system, how you think, like it's just not going to be as good a deal as it could be. So,
Yep.
we were really looking for that, not exactly kindred soul, but, someone who could really got us. And we found that in Tricia Salinero, who runs Woodside Capital. Highly recommend them. Although I hear you might run a pretty good exit firms.
Well, we do our best, but Cheryl, one thing that does really resonate with me there is that I think there's a lot of businesses out there that play the volume game, right? Like, yeah, we'll just take on all the work, and some of these things will sell. I think we're the complete opposite, and I say what you said really resonated in that we don't want to take on lots. We want to take on businesses that we fundamentally believe in. And often that comes down to a bit of a connection with the founder or the current owner. And as many of my clients would attest, I was saying to them, look, I need to know your business well enough that I can look a buyer in the eye, put my hand on my heart and say, listen, no business is perfect, but this business is really great and there's some really good value in it and there's some amazing stuff here, and give me some time and I'll explain why. I want to explain, talk about this business as if it's my own. And if you don't think you can do that, if you don't feel a connection to that business enough to put yourself forward like that, then don't take it on, because you're not the right person.
Exactly. And if you're on the other side, if you're the founder, or the CEO or the COO, right. I mean, you've got to vibe with that person. Like if you don't have some kind of vibe, some kind of connection, shared understanding, it's just going to be an even more painful process. Because let me tell you, due diligence, oh my God. How I describe it, what is it? Adamantine, like the things that the metal they put inside Wolverine, and in his
Yes.
flashback, he's screaming because it's really painful, but it's making him stronger. Yeah. Due diligence is like that. It's like that. It's like someone doing that to you
That is a great
while
analogy.
you're awake. Yeah. So, so you want to have somebody you really, have some kind of trust level with, and who's going to, give it to you straight, because it's definitely, it's in its own microcosm, like its own little mechanical bowl, of the startup trajectory.
Yeah, indeed. And so, and is that how long it took for you guys to get your deal done from when you started having conversations? What did that look like?
Yeah, I would say it was roughly, I don't remember the exact time frame. I should, but yeah, it was definitely at least 8 or 9 months. To actually, from start, like we're interviewing, M&A folks, we're starting to run the process. We're having conversations too, we're signing, a check is in my bank.
Yeah. That's funny because you just reminded me of my wife, who we have two beautiful boys. And I always remember this conversation after our first where her and her girlfriends were all talking about how they couldn't really remember a lot of the birth and all this sort of stuff. And they're like, yeah, man, this is something about our genetics. I think it just blocks out some of that painful stuff. And so you just, all you remember is the good things or I think it's always the same, right? I can't really remember whether it was 6 to 12 months. My brain's just telling me, you got to just bury some of that stuff in the back and let it go.
Oh yeah. I mean, running a business it's really, especially I would say a tech startup, like the agencies, of course, that I've run in other businesses, those have been challenging too, but there's something about a tech startup. It's the reason I named it Mechanical Bull. It's a wild ride. But you learn so much. And look, at least in the United States, something like 90% of startups fail in their first year. And of those that succeed, 90% of those fail. by their third year.
Yeah.
So, there's a lot of failure, but you are not a failure. There's so many reasons why a business might go under that have nothing to do with your vision, your solution, your passion, your drive, your hard work, and any savvy employer knows that. And so, I think that that's what holds a lot of people back, particularly women, I think, because we're often very visible and we don't want to fail because other people look up to us and you're not going to fail. Okay. I feel like I have a PhD in business now that I have a startup. And even if we had failed, you're qualified for a higher level position, a more executive level position because you have been behaving as an executive, and any smart company will understand that.
I applaud that. I think that's absolutely spot on and an amazing advice for a lot of people. It's funny when you've been a business owner and you've gone through and had to make the kind of decisions you've had to make. You are galvanized, against a lot of other problems, and you think differently from then on. So I completely agree with you. I mean, it's, and let's be honest, I mean, we learn more from use the word failures, but the things that go wrong, we learn more from that stuff than we do from the time that we kind of made it happen on the first go. And we think, oh, geez, I'm special, aren't I? Just look how good I am. That just all just worked. Actually, might have had very little to do with me. It could have just been timing and luck, but so yeah, we do learn from those experiences. And I think that's, I think for anyone out there who's doing it tough, I think that's, take that to heart, because I think that's really, really solid advice. Cheryl, can I ask you, and I don't want to tread on anything that might be confidential, so please just, I'll be guided by you here, but I'm always fascinated with, interested in maybe how big the business got when you did sell, if you can talk about that. But I'm really interested in how people come up with their number, right? Or how a buyer comes up with a number, but also how the business owner, the entrepreneur, comes up with their number. And, and I think we've talked on this show a lot about, it was a multiple of EBITDA, or it was a multiple of revenue and so on. But what was the mechanism and how people came up with it? I'm always fascinated with that. So I don't know. Can you share anything around that?
Sure. Well, because you've been doing this for a while, you know that a number is what a company is willing to pay for another company at the end of the day.
Totally.
Okay. And what a company is willing to sell for. So yeah, we certainly had, we knew how much our investors had put in. We wanted to make sure that they got, a decent return, because again, even though, we were small, Attentively was no more than maybe 14 people. When we, were acquired, we were highly visible. There were all kinds of articles written about us. We knew that people were watching, and that we were in a lot of ways proof of concept. Can you invest in a team that looks really different, in the tech space and have a really good result? So that was important to us, get our investors' money back with a little bit of extra. We wanted to make some money as well. That was important to us. But, we also were running up against runway. We really wanted to sell. That was very important. So, you factor all of those things in, and there's some negotiation. There's, numbers, get tossed back and forth. And it's not just about the numbers, though. We wanted to negotiate a good exit and entrance into the new company for our team, making sure they had new positions and new salaries and stock options, all that good stuff, good benefits, as they were coming in, and, an idea of how the team would function, the trajectory, the roadmap that our software was going to fit in, all of those things. It shouldn't be just about the money. I think, that at the same time, people often talk about their businesses like they're your babies, and it's not your baby. Okay. It's more like a house, it's something that you love, it's personal to you, but ultimately it's an investment, that you're going to sell and you're going to hand off to some lucky person someday. So, I think that was, how we came around to it, was understanding that, but also, yeah, it's knowing, feeling that it was right and it was time, and that and we were going to get a decent price.
That's cool, because I speak to a lot of entrepreneurs, and so many times they kind of, it's almost a little bit of a thumb to the wind and go, oh, well, I believe that I'm a 5 times revenue because I'm a whatever. And okay, we're all going to be influenced by things that we hear in the market. But let's be honest, like those sort of things are so isolated in terms of, you don't know the dynamics around why that other business was a 5 times whatever. But I kind of like your approach here because you've kind of layered it. You've stacked it up and gone, well, there's this element, there's the investors, there's the staff, there's all these different things that are important to us. Some of them, by the sounds of things, weren't just financial. And I guess as you start to layer those through, you start to build a bit of an idea of what a number or a good number would look like for you and your stakeholders.
And, what I came with all of that, plus one to all of that, Simon, what I would say is, again, I'm speaking of the context here in the States, but this is probably true of a lot of places. There's basically 4 different types of acquisitions, right? There's the acqui-hire, meaning you get almost nothing, but you maintain your dignity, and there's no price on dignity, Simon. Okay. Yep. And then there's new car, new house, don't have to work again for the rest of your life. And most acquisitions, especially of first tech startups, are in those first 3. Okay. Acqui-hire, new car, new house. And that's good. There's nothing wrong with that. You have succeeded where most people have failed. Okay.
Absolutely.
Hopefully, you've got a little bit of extra capital that you didn't have before. You have an amazing story to tell and accomplishment in your career. That's, most people aren't going to IPO. Most people aren't going to, sell for some crazy amount of money. And that's okay. It's fine. Yeah, it's indeed. Normal and it's natural.
Yeah. I think, yes, once again, some great advice there. I mean, as you said, 90% fail in the first year, 90% of the remainder fail in the next 3 years. That's a small percentage of people who are getting to a point where they can have an exit. So if you're having an exit and somebody else is actually wanting to acquire what you've built, that's a win. That is a win. The rest of it is starting to get down into the detail.
Exactly. Yes, you have won. You are the 5% who have prevailed.
Yeah. Did you have to hang around after you did the deal?
I was the only person who didn't go inside. They really wanted me, and we might have been able to get a little more if I'd been willing to go in. But I need to be free. So I said, look, you've got a great team. My business partner had been running it day to day. She went internally with the rest of the team. And I said, I can help you better from the outside. So we had a strategic engagement, where I was a strategic advisor for, I think, a couple years, and that was cool. Yeah.
That's fantastic. So, and once again, so cognizant of time, and thank you for being so generous with us. Can you take a minute, tell us what you're doing today?
So today, I am about to take over the leadership of the Impact Seat Foundation. The Impact Seat is one of the largest single investors in women-led, especially women of color-led, innovative tech startups in the United States. As we move into the foundation, we are going to be doing grant making and advocacy in order to build a better world and a new economy in which women can succeed in business. So really excited about that. But then I also remain chair and founder of my digital agency, Do Big Things. Do Big Things is all about providing causes, candidates, campaigns, corporations with the new narrative and new tech for the new era in which we're living today. So we work with all kinds of, any kind of issue or movement you can imagine. We have probably been behind the scenes helping out in some way.
That is very cool. Do Big Things is a great name. I love it. Cheryl, are you happy for people to reach out and connect with you?
Yeah, absolutely. Just tell me where you found me. But yeah, find me on LinkedIn. I love to talk to people from all over the world. You can also find us at impactseat.com or dobigthings.today.
Fabulous. We'll make sure we put those links in the show notes. Cheryl, thank you so much for your time. Thank you for your beautiful approach to the world and sharing your insights. I just know so many people will get a lot of value out of this episode, and I certainly have. I've really thoroughly enjoyed it. So a really, really lot of gratitude. Thank you.
Back at you. You're amazing. Thanks so much, Simon.